folks. Each month we do a commercial demonstration. We might feature a key strategic partner like Autocase, and I'm really excited for you guys to hear from them today and what they do and how well it pairs with incentives, right? But every single month we do these demonstrations. You'll see here in a second, you guys get to vote on what you want to see next month. So this month we had an outpour of IncentiFind. We want to know more about, the environmental sustainability goal reporting, how our particular developers or property owners could get tied to a group like Autocase. Hence why we brought them on today's demonstration. And we had an outpour of, can we please see a manufacturing facility? So we've got one of those for you. We complete thousands of projects nationwide. And to be honest, if you have a type of asset that you want to see, please send me an email. I'll also show you where you can put those comments on our website. And next month, hopefully we can have that particular asset type. You can invite your owner or the rest of your team. Either way, we want to make sure that you get situated with a real case study that's taken advantage of some cost saving incentives. So let's get going. I'm going to do a quick 1 minute intro. I'm going to allow Eric and Katelyn from Autocase to do the same. This might be repeat for some of you folks, but my background's architecture. I founded IncentiFind over 4 years ago. We just turned 4 years old this summer. And it was out of pure frustration that I knew by law, our governments at the federal, state, county, city, and utility levels had to give away real estate focused incentives, and yet there was no searchable database for them. So being that my background was architecture, specifically in sustainability, I knew that owners and developers had this adherence to greening their properties, right? Going above code in energy and water conservation, adding solar to their property. And it sounded unfair to me that they couldn't take advantage of these lucrative incentive programs solely based on the fact that it was really difficult to search for them. Long story short, we created IncentiFind using a 2-minute survey. Now, any property owner or anyone representing them, like an architect, engineer, general contractor, portfolio manager, project manager, facility manager, you name it, can search for incentives on any property in the United States using a 2-minute survey. So I'm really excited to demonstrate that and tell you more about that today. But let me allow Eric from Autocase just to take a minute or two to tell you about himself, and then we'll let Katelyn go after him. Eric?
Hey, thanks, Natalie. I promise I'll be brief. My name's Eric. I'm an applied economist and a practicing economist, not a recovering economist. And day in, day out, I work with our team of economists and team of software engineers, and we're out there scouring the world for great research and other information that allows us to feed our SaaS projects and our bespoke advisory work. But I spent the last decade in the real estate and infrastructure world using economics to provide insights to folks like architects, engineers, planners, and building owner and infrastructure owners, sort of how to shape design, how to yield the best value for money, and how to engage in stakeholders with outcomes that speak to dollars and cents. I'll pass it on to Kate.
Thanks, Eric. So Katelyn Lawson here. I'm VP of Product and Digital at Autocase. I have a similar background to Eric in the sense that I'm an economist and have practiced as being an economist, but I'm now sort of shifted gears towards the technology side. And so what we've done with the software is taken that research that Eric and our research team has compiled and collected over the numerous years that our advisory work has gone on, and then turned it into repeatable, usable software products so that it can be used on more projects for projects that can maybe not afford full consultancy services, but for projects that just want to assess a business case for their project, maybe a single decision point. So we'll get to show you the software a little bit today, and excited to be here.
Thanks so much, guys. Appreciate it. As I mentioned, every single month we put up a new project somewhere in the country, again, based on y'all's feedback. So here's September's projects. I'm going to kind of just run through them, and you're going to get a quick feel for how IncentiFind is quickly incorporated into projects. We reveal the available incentives, and we can also help fulfill the applications to capture those incentives. And they can be pretty lucrative for a lot of these owners. So last month we had hotels. We could not get enough feedback about you guys wanting to see hotels. So specifically, notice we had a hotel upgrade in Maryland. You can see the square footage there. And then folks wanted to see a new construction hotel. So we chose one in Missouri. You're going to see here in a second, we've got a 3-step process, incredibly intuitive. It goes pretty quickly. Everything starts with step 1. It's search. If you want to search our database, you being, maybe you're the developer on the line, the owner, or you're someone representing them, like I said, the architect, the engineer, general contractor, you name it, you fill out the 2-minute survey about the property. So it should be someone who's pretty knowledgeable about the property. It doesn't take more than 2 minutes. It's the minimum amount of questions IncentiFind's database needs in order to advance you to the next step, which is called verify. This is where we verify the eligibility of incentives. You're going to hear a lot of Captain Obvious nomenclature at IncentiFind. We like to keep things pretty simple, right? The owners will always purchase the verify reports. I'll talk about the pricing on that, how that works. But once the verify report is purchased, our team of commercial sector incentive experts will sit down with the owner or owner's representative and talk about how the property is eligible for a certain number of incentives. So you can see here, the hotel was in a very lucrative incentive offering. However, based on the 2-minute survey response, they were really only eligible for about 21 incentives. And even then, they only considered 8 incentives. Why would an owner want to consider less incentives and not go after all 21? Well, with the purchase of a verify report, you're going to get the opportunity to book a 1-hour call with our commercial incentive experts. And trust me, you're going to want to do that. Even the folks that have used us dozens of times will always book that call. And it's because our experts will tell you the good, the bad, the ugly on incentives. So while you might be eligible for an incentive, there could be additional costs. It could not really fit your construction timeline. There might be a low success rate associated with that. So we will help you really go after the incentives that make sense for your project or your owner's project. So let's have a look at what 8 incentives represented on this existing hotel in Maryland. Notice they represented $105,000 in cash reimbursements for HVAC, VFDs, LEDs, that's a tongue twister, food service, refrigeration, and custom. All that means is perhaps there's not an incentive for a specific focus like you're seeing here. So it's going to capture anything else that's remaining on the energy efficiency front, right? You can see there was also $10,000 cash reimbursement for solar plus tax-related incentives for solar there. Same process. Again, everything starts with a 2-minute survey. You can see very healthy incentive offering for this Missouri hotel. And they were eligible for 26 incentives. We looked at, the good, the bad, the ugly on those incentives on that 1-hour call that you get whenever you purchase our verify report. The owner decided to go after 4 incentives. You can see what that represented: $180,000 in cash reimbursements for HVAC, chiller, LED, controls, building envelope, and appliances, right? Plus a $12,000 tax incentive for the 179D and a $30,000 cash reimbursement for EV charge stations. So really, these owners wouldn't have known about that without IncentiFind, right? So that was our September case studies. If you want to see those, go to our website, click affiliates. You can find that demonstration on our YouTube channel if maybe you deal a lot with hotels or you've got an upcoming hotel project. For those of you, this is your first time and you're wondering who is IncentiFind, can you step back here? Not to worry, we are the nation's only database for real estate incentives. We operate in all 50 states. We do not work in the US territories. Incentives do not work the same in the US territories, but if you have an asset, a property, or a project anywhere in the 50 states, we certainly can help you. Our goal is to bring cost savings as quickly as possible to projects using that 2-minute survey that I mentioned, right? We are based in Houston, Texas, but our team sits all over the country. We operate virtually. This means we do not need to show up on your site. We don't need a seat at the table with your owner. We can work directly with you if you're an owner's rep or a professional service provider. And I'll talk about the 12,000 incentives that we house and what those look like. For now, everyone always asks us, IncentiFind, how much does your database, how much does it actually represent? We know you're a clearinghouse, but how much money is out there? This is actually last year's tabulation. With COVID, we saw a massive surge in use of our database. So forgive us, we've been, our heads have been down working hard to connect owners to cost saving incentives because everyone's a little cash strapped right now, right? But this was last year's figure. It's a minimum $10 billion that's in our database every single year. So come 2021, there's gonna be a minimum $10 billion that we're in a rush to get connected to property owners, developers, but also tenants. So please do not think that this excludes any tenants. There are tenant focused incentives. We collect incentives from federal, state, county, city, and utility level governments. That includes gas, electric, and water. We stack those beautifully in a report, and I'll show you what one looks like here in a second. So, you know, if there's really any takeaway that you get from today, if this is new to you, we're the clearinghouse for $10 billion at minimum in incentives every single year. We connect those to properties or projects using a 2-minute survey, right? That's us in a nutshell. Let's have a look at what's in our database. Notice first, it's bifurcated. We've got the new construction side of the house. We've got the existing buildings. And I have highlighted in yellow the only thing that matters, which is folks coming to us and saying, IncentiFind, how do I know if I'm going to be eligible for incentives in your database? How do I know if my owner is going to be eligible? It's pretty simple. They just need to be going above basic building code, which, let's be honest, most projects are. And if that sounds like news to you, let me just kind of back up here. Most products, equipment on the market today, so HVAC, MEP type of equipment, is going to be above code. Most architects are speccing above code nowadays. To be honest, most owners are looking to go above code because we all know that energy efficient, water conserving assets have a higher value and attract and retain tenants better, right? So more than likely your project or your owner's project is going above code, and that's the minimum qualification to be eligible for the incentives that we house, okay? So when you complete that 2-minute survey that you can access at IncentiFind.com, or your owner can do it. Again, anyone who knows about the property can fill out that 2-minute survey. Here's what's going to happen with our database. It's going to read that survey, and it's going to begin looking at all incentives in the energy category, renewables if applicable, water conservation, and the land that the building sits on, unless it's a tenant. And of course, we won't do that because the tenant doesn't own the building, right? But it's going to look at the building holistically. And that's important because we're not just an LED lighting, you know, rebate database. We're going to look at that building, both indoor, outdoor, the building envelope. We're also going to carry incentives like load management, demand response, economic development type of incentives. We are trying to help your owners stack as much capital as possible so that they can be rewarded for the work they're doing and going above code, right? So we're going to look at all energy systems, indoor and outdoor. We'll look at renewables such as solar, again, if that box is checked. Not all projects go after that, but please know we do house those. We're going to look at water conservation, both indoor and outdoor. And then, you know, here's some great examples of how we look at the land that the building or asset sits on, including EV charge stations, right? That's really the only way in which we go horizontal. We're mostly a vertical incentive database, right, for the vertical built environment. And down here at the bottom, the categories of incentives that we house are going to be tax. I'd say they're mostly going to be tax and rebates, but we do see the occasional grant program such as beautification, as well as fee waivers. Perhaps you're addressing affordable housing or infill, and bill credits. There are a lot of solar and a few energy efficiency programs that will return savings to owners and tenants in the form of bill credits. So that is our database. Let me talk about how we work. Again, it's a 3-step process. It's pretty intuitive, and everything's going to start with that 2-minute survey, right? So please note that for a lot of our developers, even our A&E firms or our general contractors, we're very concerned about putting project information into a database. Curious, what does IncentiFind do with that information from those survey responses? All we do with that information is use it to produce your report. We do not sell that to third parties. It stays between IncentiFind and whoever enters that. The way we built our business model, we have no need to monetize this. So please know that we understand the confidential nature of a lot of projects, especially when they're trying to determine financing and stack capital. So again, that information is solely between IncentiFind and whoever fills out the survey. So after that 2-minute survey is done, here's what happens on the back end. Our database immediately match makes that the property to the incentives using the survey response, right? And we produce this verify report. I'll throw one up on the screen here in a second. It's really nice. You'll see all 5 levels of government. You'll see how it's interactive. You just click buttons on the incentives you want to cherry pick, and we advance you off to our apply services, which is where we capture the incentives on your behalf. And so let me just discuss the fee, because we do get asked this a lot. First thing I want to note is anytime you fill out a 2-minute survey, the price is going to be right there on the top right-hand corner. You're never going to be surprised about the cost of about your anticipated verify report. If you're filling out the survey for any asset anywhere in the United States and it's a single building, it's $500. That's it. So if it's 1 million square feet in New York, $500. If it's 5,000 square feet in LA, it's $500. So we try to keep that as not a barrier to entry for anyone who needs to get connected to our incentive data. And I put complex here because we deal with a lot of multifamily and mixed use portfolio owners and developers. If you have multiple buildings in your complex, it's still $500. If you deal with campuses, corporate campuses, school campuses, university campuses, or portfolios of assets. Maybe you're managing a hotel asset like I just showed on the September example. And with the low occupancy, you're probably doing upgrades to those particular assets. We will give you discounts. If you're curious what that discount represents, go fill out a survey. You'll see there's a box to check for campus portfolio. Again, the price is going to be displayed. No surprises there. From that verify report, remember you select the incentives or your owner selects the incentives. So you're in the driver's seat 100% of the time. And you click a button that says, help me apply IncentiFind. It's that simple. And you will activate our application fulfillment team. They will get to work on every incentive that you select. And notice we operate off a pure contingency fee. What does that mean? Well, let's pretend that you had an LED lighting incentive that your owner was really excited about. And let's just pretend for square numbers that LED lighting incentive is worth $100. Obviously, they're worth far more than that, but let's just use square numbers. That means you'd click a button that says, help me apply to that $100 incentive in IncentiFind. I want that cash back in my pocket. Our team, once you click that button, would get to work. We'd chase down that $100 on your behalf. We would schedule the inspections, coordinate the applications, grab all pertinent documents, submit the applications, run all of that down for you. Grab that $100. We'd put 25 in ours and send you 75. So let me kind of run through the time commitment. That means you're on the hook for a 2-minute survey, a 1-hour call that I highly recommend you use our experts to cherry pick the incentives you want, and however long it takes you to forward us all of your specs, quantities, and plans. That's it. We take care of the rest. Please note that tax-related incentives While we don't do those in-house, we have key partners around the country that will make it feel that white glove service feel for you or your owners. So just know that we're not going to get you excited about tax incentives and leave you hanging, okay? Next thing I want to kind of just go over, we get asked this all the time, and please note that this diagram is on our website, so you don't need to try and memorize or take notes. IncentiFind, when is the right time to think about incentives? It's pretty easy. For existing buildings, here's the ideal window. First off, whether it's existing or new construction, it's never too early to start thinking about incentives. If you're a developer on the line and you're teetering between two parcels of land for your ground up development, come in, put in a survey for both parcels. We might be able to help you decide one parcel over the other based on lucrative incentive offerings. A change of a zip code can vastly change the scenario. So it's never too early to start with IncentiFind. It is, however, too late. So let's talk about the bottom of the ninth for existing buildings. If your owner is about to change out that light bulb, change out that chiller, or within 60 days, you're hitting bottom of the ninth. We need time to get pre-approval, inspections, all the requirements to get the owner pre-approved for that incentive. And so if you're giving us 60 days, that might be cutting it too short. Get those projects in sooner rather than later, especially on existing buildings, okay? For new construction, the window's a little wider. I'd say about 90% of utility companies will allow new construction projects to go retroactive. Not all, but there's quite a few that will. So if you have received your certificate of occupancy, as long as you're not past 12 months of CO, we can still get you in there and possibly retroactively apply. Now, because there's that 10% chance that you might not get anything, don't risk it. Just come in this, sooner rather than later, and we can be sure to connect you to those incentives. So just want to make sure, again, this is on our website. And lastly, folks, if you want to know how quickly do you get your Verify report, anywhere in the country, we can usually get you the report back within less than 10 business days. But remember, you're going to want to schedule that 1-hour call. So if you're really trying to estimate the number of days and it's down to the wire on that existing building, reach out to us, let us know. We'll see what we can do to maybe advance your project. All right, let me turn it over to Autocase. I believe, Eric, you'll be telling us about Autocase.
Yes, I will. And thanks for that, Natalie. I've learned a whole lot more about how IncentiFind actually works. So this is time well spent, at least from my side as well. So I appreciate that, and love to share a little bit more about our firm, our analytics, and how it can support very much the same target market as IncentiFind in the architecture, engineering, consulting space, in owners, and as well where we're quite active as it relates to different levels of government. So think of Autocase as TurboTax in the economics world, and the idea here is to take complex business cases that really our goal is to create a suite of online multi-benefit valuation tools that build the business case for these broader set of intangibles related to project design. So Natalie had indicated the core user market for IncentiFind are those projects that are investing in aspects that are over and above code. Very similar to our clientele, are interested in the business case for making greater investments in better design. So in the name of sustainability, resilience, or health and well-being. And really our goal is to automate that process of building that complex business case to denote the value of those projects. And we can speak about the use cases and those outcomes, but really it's a SaaS platform that's based off of roughly a decade of experience, at least from my end. The co-founders substantially more. Our main founder and CEO, John Williams, was the single largest shareholder of HDR, a 9,000 person, $2 billion a year revenue architecture engineering firm, and helped to build that up over 30 years, and retired with the idea of automating and let's call it democratizing these analytics to provide insights on projects. And we're based in New York City, but primarily our development and economics team is based in Toronto, Canada, and we cover the North American market. Next slide, please. So what do we do? Well, we're engaged across the life cycle of a project and really supporting the market with questions that we've seen shifting over time. So, the idea of what is it cost, and those questions to changing that perspective to what is it worth, and what are the trade-offs of costs to benefits, not just on, say, upfront costs, but on a broader perspective, maybe including life cycle costs and the broader benefits to occupants and to the community. Taking a broader shift in the market as well towards questions on should we do sustainability, towards how should we do it. And really the idea is to use economics, let's say not a forte or an area of expertise for architects and engineers and planners, and really putting the power of economics in the hands of those folks who are designing, planning, and investing in developing projects. And so really as early stage planning, we built into Autocase numerous default values that can be used, and providing a rough order of magnitude assessment on different strategies, things like should we pursue net zero energy? What are the implications? Should we go after certain LEED credits, certain well credits? What are the implications with very little information needed from our users' perspective? Ultimately, from a stakeholder engagement perspective, dollars and cents are an important consideration to any project. And so really what we're doing is taking the anecdotes out of conversations, and we're providing some additional content to speak to stakeholders and provide them with the rationale in a defensible, objective manner. Ultimately as well, when we think of how projects get designed and developed, certain workflow and different information will be provided. Those sorts of information like energy modeling or other early stage information, maybe even before that, can be used and leveraged within our tools to provide rudimentary business cases. And then as projects progress in an iterative fashion, we can easily update the numbers within the platform, providing more insights, better precision, and ultimately an understanding of what the value is of project. And then finally, with a click of the button, we can provide all of the transparency that's needed, auto-generated reports, information that allows one to slice and dice the value of a project and the value of different designs. Next slide, please. So what does the software do right now? Well, essentially, we're creating that incremental business case on design strategies and investments that, again, are above and beyond something else. So that could be the municipal building code. It could be another target. For example, often we have projects that might be obtaining some, say, certain level of LEED or well or fit well, and there's questions or interest in pursuing even higher level. And so essentially what we need is to understand what's being evaluated. And so Autocase essentially can denote the value across a suite of different strategies. So we're building that LCCA we see in the top left, that's life cycle cost analysis. So allowing one to fill in those full cash flows from the capital investments that are needed to them, to the ongoing operations and maintenance, to the replacement schedule, to disposition and salvage value. So building that full business case, but adding to it some of the broader considerations that are related to energy efficiency, water conservation, a view to what we call the total carbon story, in this case, accounting for operational carbon, embodied carbon, carbon on the roof, carbon on the site as it relates to vegetation. There are questions around the value of these different investments and designs, and Autocase can denote that value. And really the the idea here is to marry the best available empirical science. So we're scouring the world for the latest and greatest as it relates to designs and outcomes. So how does improving your FPS on ventilation rates or filtration systems and your MERV rating drive outcomes to occupant health, productivity, impacts in absenteeism? And so we're taking that science from academia, from government organizations, and we're marrying that with a way to value those changes in quantities, and that's through monetization or through economics. And we're taking the best available peer-reviewed literature that can translate those quantities. So a difference in adding a tree and how that sequesters carbon and how it helps to infiltrate water and provide shading and evapotranspiration that provides cooling. How do we translate those impacts into dollars and cents? And that's where economics comes into play. And so really taking those design strategies, we can value impacts, not only those life cycle cost implications, but also, let's say, the intrinsic value to investments, things like environmental implications around carbon or criteria air pollutants, as in NOx, SOx, VOCs in particular matter, highly detrimental to human health, and other implications, or things like saving fresh water, for example. And then we've got social implications, healthy buildings, occupant wellness, very important in this day and age. And so being able to note the value associated with greater investments in that space is part of the platform as well. I think we'll move on to the next slide, please. So let's think about the workflow, and what I want to say as well is the nature of the analytics that we're using to do that quantification and monetization. It's called cost benefit analysis, or triple bottom line cost benefit analysis. This is widely used, of course, across North America, where our products are active in 5,000 municipalities, but also globally. It's sort of the de facto standard to make decisions in the regulatory space. There are several executive orders in the US that mandate its use from a policy perspective. And of course, it's the source of tens of billions of dollars of fiscal stimulus programs on an annual basis. It's the concept of building that merit-based business case to denote the value of public benefits associated with your projects. And really, we're taking that, using it primarily here in the real estate market to build that intrinsic case. And so how do we go about using Autocase within a workflow of a project? Well, really, it's four key pieces of information. The location, first and foremost, once you put in where the project is, that's going to tell the software where to look up in the cloud all of that site-specific information. So we track 5,000 municipalities across North America. We're tracking local wage rates, local property values, emissions factors from the regional power grid, escalation rates on utilities and utility rates, a whole bunch of characteristics, including precipitation, temperature, and forward-looking climate change scenarios to build that contextual business case on each and every project, which is so important because we can have very different project outcomes from one project to the next, given how those underlying data factors and parameters drive things like water scarcity or the polluting potential of the grid, for example. Other information is the size of the building, what type it is. So we have different data for roughly 3 dozen typologies, and how long are we studying the project for. And really, that's it. That's the core set of information. And then we have over to step 2, really it's identifying what is being invested in. So what are the goals of the project to invest over and above that bare minimum? Is it energy efficiency, water conservation, indoor environmental quality, roofing or sites, renewable energy? identifying those, and then really inputting some data. So either using Autocase pre-populated default information gathered from numerous sources, or leveraging some of the integrations that we've made with a variety of other tools, including IncentiFind in our partnership with you all, but also life cycle emissions tools like Tally or One-Click LCA, costing tools like RS Means, and other integrations such as ARC with GBCI on the reporting and existing facility side of things. Click a button and you get a suite of decision support metrics: net present value, return on investment, benefit cost ratio. Katelyn from our team will get into that, but the idea is automating a set of key metrics and decision support outcomes to provide insights in a project design. Next slide, please. So we really fit in across a wide range of projects and provide different analytics and different information. But the idea is taking a little bit longer than the 2-minute survey, but within an hour being able to understand the value of a set of investments. And we'll have different clients that use these analytics in different ways. So we actually work with a number of commercial real estate and large facility and building owners and developers. Think of folks like Brookfield, who owns tens of billions of dollars of real estate, REITs like Kilroy, Prologis, Rexford, other large development and investment organizations like LaSalle and Heitman, and in large industrial operators like Pratt and Whitney. Each has a sort of a different intent, a different use case. In some cases, we're working with the architects and designers that support projects that these commercial real estate firms are leading. In some other cases, we're working directly with them. We also work at over a dozen of the large airports in the US as well, and in several, including SFO and Atlanta Airport, the world's largest. We have requirements around design and procurement that require an Autocase analysis to be done to help them better understand the value and ensure that investments and designs have a view not just to upfront costs, but to life cycle costs and the benefits that it provides to occupants and to the broader community. And so really to support in a very short time the understanding of what that value is, where that value is coming from, and where that value accrues to. And that's around the planning, the design, and the stakeholder engagement side, and really being able to, I think, the key piece as well is to provide a tool that allows collaboration between the owners, the design teams, and other stakeholders in the market, and really speaks to the value across these multiple dimensions, including a large suite of carbon implications, environmental outcomes, and occupant and social implications that are, from what we've seen, have never been more important. Next slide, please. So maybe just go back a little bit, and just one slide up again, Natalie, please. I think as well, something to note that the reporting, so those auto-generated reports, can be used towards 2 lead credits as well. So additional use cases outside of helping to prioritize design, to engage with stakeholders and better understand value, is to be used towards lead credits. And also on the horizontal infrastructure side, the Envision rating system has a dedicated credit category that can earn up to 14 points by conducting this type of analysis. So used in the ESG reporting space, used in project design, and used in stakeholder engagement. So maybe I think it's a good time to pass it over to Katelyn here for a demo, and we can see how much incentives play a role in project outcomes when we speak to that business case.
Great, thanks, Eric. All right, so yeah, I'll be respectful of everyone's time and just do a really quick demo here, but I just wanted to sort of tell a story. Now this is a very sort of simplified down story for the purposes of demoing today, but inspired by a real project. And so I'll just jump right in here. So I'm just in the Autocase platform, and it'll just give you a bit of a taste of sort of what you can do and what it looks like here. So for this particular project, it was a roofing upgrade that was being assessed. And so there were sort of two different alternatives, with sort of the as-is situation being an asphalt roof. And the two different designs that were being considered was a 50% PV system, so photovoltaic renewables system, and 50% asphalt on the roof, compared to 50% PVs and 50% green roof. And what I'm going to showcase too is just how the incentives really sort of made the difference. The requirement for the financing for this particular project was actually a 10-year discounted payback period. And so I'll show you sort of how this story came together. And this, like I said, it's an anonymized, simplified version, but inspired by a real project here. So I'm just going to give you a taste of what it looks like to enter information into Autocase real quickly here. For this particular project, actually, it was Autocase's early stage PV cost estimate that was used. So just entering in the size of the system and getting the costs here for that. So really simple. Under the energy impacts, adding that renewables, and I'll show you where to add incentives here as well. So for the design number one, which was the half PV, half asphalt, it didn't qualify for some of the incentives that the green roof did. And so I'll show you the difference there. And so if we go into energy efficiency, there's a couple ways to enter in incentives in here. So this information was gathered from IncentiFind. I have the verify report. I can actually show you. We simplified it down. So there's 3 incentives we've included just for showcasing today. And that's a tax credit here, a local utility incentive as well, in addition to a green roof CapEx incentive here. And so all this information was entered in, really didn't take a lot of time. And then we were able to combine that with some of the other inputs here as well, just around entering how much was a green roof. So you just sort of enter the percentage of the roof that was a green roof compared to a PV system. So I realize I'm going through pretty quickly here. Just want to make sure we're respectful of your time. So that just gives you a taste. And actually, one other thing I'll just show you is you'll see, for example, if I go back to entering in the cost, like IncentiFind button here. And so basically, this will connect you directly with IncentiFind so they can help you gather the information required. We have partnerships, and you'll see them sort of scattered around Autocase, different partnerships for different sort of integrations that we have to make this workflow even easier. So I'm just going to showcase the results of this project. And this will give you a taste of the kind of information you can garner from a business case. And so if I just quickly glance here, what you'll see is the 3 different alternatives. So we've just split out the green roof with and without incentives. So that's the 50% roofing with PV and green roof versus the asphalt. And so I'll just dig down and show you sort of what is compiling this total dollar benefit. And so really what this is this is a combination of environmental benefits in blue there, financial, and then there's some social impacts as well. And I'll show you what those are. But one thing to just take away here is that in the financial, you can notice that the green roof system is actually, over the operations life of this roof, is actually performing better financially than the asphalt roof. But there is just one issue. So the asphalt roof, I had mentioned that there's this sort of financing requirement that they had to meet. And so if we look here, they're underneath this 10-year financing requirement. But for the green roof example here, they were not. And so this was the issue. But when we added in the incentives, it was able to get them underneath this 10-year requirement. And so incentives can be incredibly important in that regard. And I'll just show you some of the other sort of, you can see this in a few different visual ways. I like to show sort of the year over year, because it'll give you a sense of really what's happening financially year over year. As Eric had mentioned before, we're really trying to bridge the gap between those upfront costs and the operation costs, as well as some of the expanded impacts, which I'll talk about here as well. So you've seen sort of the electricity impacts over time. That's, you know, reduced electricity costs because of the renewables on site. But there's also these environmental impacts, and carbon emissions and air pollution are becoming more and more important. And so we're really trying to bring them to the forefront of the discussion when in the decision-making process by showing what they mean in economic terms in a dollar standpoint. So these are community dollar impacts that are happening because of the building design decision. And so you can see sort of here just a taste of all the things, you know, here's the incentives, a taste of what we analyze and what we can essentially show the economic impacts of. So I'll just sort of pause there. Maybe one other thing I'll just showcase here. There is quite a focus on the carbon as well. And so, you know, we do try and tell a really important carbon story, which is around, you know, where are the carbon impacts coming from? Is it materials? Is it operations? And the timing of that. And so this carbon story has become more and more important in the overall, you know, business case and story that is being told with regards to design decisions. So I just wanted to mention that as well.
Absolutely. No, I love it.
Yeah.
Katelyn, because, and actually, could you go to that verify report real quick? I've been talking to folks about this. Have a look at what one looks like. I know it's zoomed in here. Actually, you know what, Katelyn, I'll steal it just so I can show them.
Sure, yeah.
I got 2 questions that have come in direct message, and I want to be sure I answer those in the last few remaining minutes. I got the question, awesome question, by the way. Who do I start with, IncentiFind or Autocase? You know, let me kind of step back to go forward here. First off, IncentiFind, I'm at IncentiFind.com. Make sure that if you're going to put in one of your surveys for upcoming projects, that you do register. You want to register because we don't want your survey floating out there just on the internet, right? We want that only between you and IncentiFind. So you do need to register in order to get access to our survey. To get access to our 2-minute survey, click I have a project. You're going to come right here, answer this 2-minute survey. I mean, these are all pretty obvious questions. Ever since we added this question right here that you see on my screen, we have had well over 50% of our projects say that they have mandatory reporting requirements that Katelyn just showed you. So if you are perhaps a A&E firm or a GC representing owners and you wonder, will Autocase be relevant to them? I'd say for the thousands of projects that we see at IncentiFind across the country, if more than half are coming in with reporting requirements, you can anticipate that this will be a requirement for a lot of owners, right? They want to know what kind of impact their building or new construction project is having. So as soon as you answer question number 16 on either behalf of your owner, ask them in advance. The second you select any of these, we are going to make sure we get you connected to Autocase. They have been so gracious to say, we are happy IncentiFind to, give up an hour of our time to educate anyone who responds to number 16 as a required report or as a reporting requirement, and sort of walk them through what might be of their owner's best interest. So you can rely at starting with our 2-minute survey, and filling it out, answering question 16, we're going to get you or your owner connected to Autocase at the end of the day. Like I said, we understand that this is becoming a requirement for so many of our owners, developers, especially portfolio managers. Any corporation you might deal with absolutely has these requirements. So just wanted to make sure I answered that portion. But also, if you are already familiar with Autocase and maybe had been thinking about giving them a test drive, you see how Katelyn just showed you. There's a button right there. You can find IncentiFind, incorporate our incentives into the overall business case of your particular project. So, there's a lot of synergies in how we're making sure we're communicating with both of our customer bases. With the last few remaining minutes, I do want to quickly show you a report I think I had teed up. So let me just get you to that. I think it's really important that folks be able to see an actual report. So here's a Verify report that's been posted to an account, and we do everything digitally. These reports are going to stay on, you know, your owners, or perhaps it can stay on your profile and you share it with your owner. It's 6 one, half dozen the other. These reports can live on whoever is dealing with the project for the entire project life cycle, right? Design and construction. So they're live, they're dynamic. They are, you know, here's where we're going to stack all the incentives from 5 levels of government: utility, city, county, state, federal. And notice this one has not gone through its cherry picking process, but here's how it would work. You book that 1 hour call with our commercial team. Remember, you fill out a 2-minute survey. We get you your report, book that 1 hour call, because you want someone guiding you through the good, the bad, the ugly. You simply just star what you are interested in. And whatever you're interested in, we will provide what we call a soft estimate, an estimate of what we think those incentives are worth, because everyone wants to know, how much cash am I going to get upon the installation of these commercial, you know, cooking appliances? Can I expect, and when? So we will answer all those questions for you. Each one of these is a hyperlink. So if you're interested in this, click it. You'll go down to eligibility, information. Maybe you're an owner and you're like, I am not reading through these details. That's fine. You can share this report. It's got all the information for your architect, GC, engineer, you name it. Anyone who's procuring or speccing, it has the information there. The estimated funds column is the most favorite. That's where the money's at. Everyone always wants to look at that one. We're going to manage expectations and tell you how the incentive fits within your construction schedule. Can you double dip across program years? A lot of our projects do that. Rely on our team to tell you how to do that. We'll tell you the next steps to capture, because we think it's important. If you click this help apply button where you release our application fulfillment team to go and grab the monies on your behalf, you probably want to know what the heck we're doing, right? So we tell you, go ahead and tell you all of that right here. And again, the second you click this button, I'm not going to do it because it will advance it to the next step. This incentive slides onto a really nice apply dashboard, and you and your owner get to watch it go through application prep, application submission, application acceptance, rebate check will be cut in 30 days. You know, it has the statuses all there for you in one place. We really want you to use your dashboards. So that way things aren't living in your inbox, right? They're all in one easy place where you can understand how much money is coming back to you and when. The only other thing I want to show you real quick is if you or your owner like one of our tax related incentives, notice it says get connected, not help apply. Remember, we don't do that in-house. So, but remember, we do have tons of partner firms that can certainly help you and your owner get connected to the most appropriate incentives. So let me scroll back up to our incentive summary. Again, you're looking at a Verify report. This is that flat $500 fee. So I'm going to scoot back over to the presentation. So give me a second while I locate that window. Continue to put your questions into the chat box, and we are happy to answer those. And hopefully we answered your question about who to get started with, right? 6 one, half dozen the other. So, and then here is our last project. So you can see the case study that Katelyn just went over. There it is, right there on the screen. Again, you're going to get a copy of this. So you can also find these case studies on our website. So perhaps you have an owner that's dealing with that type of roofing issue, or, you know, project or opportunity, and you can rely on IncentiFind to flush cost savings there, rely on Autocase to help build a much broader business case, right? I know we are at time, folks. So what I'd like to do is just use this remaining time to remind you, you're going to get a recording of this. You can also find this on our website, which links you directly to our YouTube channel. But before I let you go, you know, big thanks to Autocase for being on today. If you want their contact email, or details, you can certainly email me. I'll see if I can try and grab marketing before they send out the Zoom recording. See if Katelyn, Eric, we can put your email address in there. You can always locate them at their website as well. And then be sure to tell us what building you want to see next month. We've got assets all over the country. So we're really excited to kind of show off for you guys so you can connect your owners to cost savings. Alrighty, folks, we'll see you next month. Thank you so much.